Hey everybody, welcome back to Ace 52 Week Highs. You saw that beautiful introduction letter. We are live on StockTwits, Twitter, and YouTube. We also have a channel here named at Ace 52 Week High. So please continue to follow me as I try to teach all the newbies and all professionals and the intermediate traders of opportunities. We're here, by the way, just to all make money, right? So if I find an opportunity, let's share it. You find one, share it as well. We're all one community, and again, our objective is all to make money. Opportunities is what provides capital flow for all of us, right? Alright, so let's continue. Today's Monday the 23rd. I want to congratulate all the Giants, New York Giants, and the Patriots fans of having another repeat of 2007 to 2008 Super Bowl. I'm personally a Giants fan, so I'm going to root for them to win, to have a repeat. Got to believe in the elite, Eli. He truly does belong in the elite quarterback category. So we got another 2 weeks before the Super Bowl, February 5th. Mark your calendars. All right, so let's go to the S&P today. Today's been a wild ride. Let's show up in the calendar, the daily chart here. It started out strong this morning. We hit a high as high as 122 range, and then the market started teetering down. There was a comment out of Europe that stated that they weren't willing to give it additional funds to Greece. So that's what actually caused the market to consolidate to the downside. With down pressures again, by midday, by 12:30, 12:15, that's when markets started to pick up as usual with light volume, and it finished just barely above positive territory. So we're at a 0.62 up for the day. Okay, so let's bring it out to the 1 week. Let's see if it still continues our process here. As I noted last week, this was the top consolidation line. We gapped up, we consolidated for 1, 2, 3, 4 days before the next gap up here. All right, and right now we're consolidated for one day, and then we gapped up a little bit more, and now we're consolidating for 3 days, it looks like. So this continues to be the resistance at the 1316 the S&P. All right, again, I will always maintain the S&P as my figure point of the indices. I also like to use the NASDAQ and as well as the Dow, but for purposes in this instance, let's keep the S&P. All right, so right now we have to keep a close full eye on the 1316 area. All right, let's go back to the 6 month. See, let's bring it out to a little further. As you can see, the unbalanced volume still looks to be strong around this area. Then it tends to be very weak above here. So anything above here, it's going to be very easy to squeeze to the upside. We're still holding in an uptrend. The 1265 was the notable area that I noted to enter the markets all in. And again, we are closely approaching the 1330 as I marked on one of my previous videos of last week, which has, by the way, has pretty good significant following and comments on it. All right, so reference that to that. It's a little bit long term. It works out to the 2-year, to 5-year, then the 20-year. So again, this 1330 mark is my my correction area. It looks like it's almost Peter panning out to the top end here. Here's my hypothesis. I really think Greece is not an issue. It is for the interim. It always has been. I think it's already been corrected. I think the baton's going to be passed over to Portugal. Let me just show you why. I pay close attention to the CDS rates. They're at the 5-year CDS rates, which pretty much state what's the probability of default. Investors were willing to invest in a bond, but want a higher return on their investments. So let me pull up the Portuguese 5-year CDS rates. All right, this is taken from Bloomberg. With this information, as you can see, this is the 1-year chart. It started out before the whole malaise. It was around the 500 area. Then back in July, that's when they were announced to receive a bailout, and they received a bailout again June or July, because 750 seems to be the area on the 5-year chart, where lending rates are unsustainable. Okay, so as you can see right now, we're at an all-time high. Let me bring it out to 3-year. Let's stretch it out a little further. 5-year mark, if this loads up. It doesn't seem to be loading up. Alright, so we're going to use the 3-year. It's pretty fairly reasonable. Right now, yeah, again, we're at the high end here. Something tells me that the Greek economy is unsustainable. I don't think they can maintain their high deficits. And I don't know if you guys know, but you got to use the macroeconomics. A lot of traders don't use that. They're not educated. The only thing they're familiar with is just the charts. You gotta step aside from the charts and look at the macroeconomic environment. Okay, so I think this is going to be the next ball to drop. Portugal cannot sustain I know they're off the public markets. They're not borrowing at this current rate. They've been bailed out by the IMF and the Euro. However, one thing to note: 2013, they're supposed to go back in the public markets. I don't think there's any chance whatsoever. You have to write down their debt. They have to have a debt restructuring. They're essentially bankrupt. What are they growing in Portugal? I think it's more of a tourist country. I know they have a little bit of wines. They have excellent food. I'm a big fan of the Portuguese. However, the economy is pretty much non-existent. They have nothing to grow. Austerity is killing the economy. You're seeing that in Italy. You're seeing that in Greece. You're seeing that in Spain. And for not for nothing, look at the UK. UK is one of the strongest countries out there too. It's the top 6, top 7. So we always have to take this in consideration. So Portugal needs a debt restructuring. I'm sure you're going to hear this in the news. You're going to hear it first from here at ACE 52-week high. And I think once we hit 1330, around that area, you're going to start seeing the Portuguese issue expand. All right. So let's go back to over here. We're almost there at the 1330 mark. I think once we hit that mark, we're going to start to consolidate, and we may fall back to the I want to say the 1280, 1260 range. Something's bringing me around that area, and then we shall see. Once we hit that 1330 market, then we'll reassess the market. Okay. Let's bring it out to 5-year. Still maintains the uptrend. We still have a resistance here at the 1327 mark. It's about fairly rough, fairly close to my 1330 trend mark. As I noted, this trend line right here, the upper channel, is the 1330. Again, if we break above it and we maintain that bull rally above this mark, then that 1330 hypothesis does not remain. So then we have to improvise. We have to improvise to the upside. Okay.